I think the reason why we've been successful is, number one, we tell the truth. We really believe in our values, and we also adjust. We look at the market, what we don't think is going to sell, what we think it's going to sell, sort of at different asset class, and we go after these asset class.
Hello, and welcome back to the Espace Montreal Podcast, a show dedicated to commercial real estate right here in Montreal. And today it's a pleasure and an honor to have a big player. I'd like to introduce Mr. Joe Rullier, Senior Vice President at Colliers. Hey, Joe, welcome to the show.
Thank you for having me.
Look, it's a pleasure. I've been looking forward to this conversation. I've heard lots about you from Andrew and throughout the industry. Before we jump into the real estate stuff, I understand that you have a background in hockey. And so how in the world did you get involved into commercial real estate?
Well, it's a long story. As you mentioned, my first career, I was a pro hockey player. I was drafted by the Kings. I played with the Kings organization, the Rangers, Tampa Bay.
Wow.
New York Islanders. I did a few teams, and then I went a few years in Russia, Switzerland, in Europe.
Okay.
My last year in Russia, I had blew my knee at the beginning of the year, so I came back to New York, where I was living. To do the surgery and the rehab, and took me like 9 months to do that rehab. And I was always the kind of person that was saying that if I don't have the fire to wake up every morning to go to practice and want to be there, I'm not gonna stretch it.
Yeah.
After that 9 months, I realized that I wasn't there anymore. So I decided to go back to school at NYU in finance. I did NYU Finance. I did a bachelor, the equivalent of bachelor in real estate, and I applied to Cushman and Wakefield at the time. I applied to a team. It was Bob Knuckles' team. He was the number one investor broker in New York, which was a big deal at the time.
Yeah,
he's still one of the top guys. So I got the interview, got the job. Obviously, after 15 years of hockey, I was a little older that most of my competition. But because Bob had also a sports background, baseball for himself,
okay,
sort of gave me my shot. And he was like, we only have two rules here. It's like you have to be here before me and leave after me. Which at the time it was mid-60s and already very successful, right? So I figured probably going in the Hamptons on a Friday and
you'll leave early.
And you have to make 500 cold calls a week.
Okay.
And they are recording the cold calls, and if you don't do your cold calls, you get one chance and then you're out. So I'm sorry, I can live with that, So
fine.
I put my work ethic that I learned in sports to it, and I'm doing. But I didn't realize that Bob is at the office at 5:30 in the morning, and he leaves it at 11. So all that to say that I learned it the right way, the old school way, where you put in what you put out, and I'm so grateful that I went through that school.
Yeah. Early on in
my career. And the market in New York, the speed of it, and the learning curve, it would have probably took me 20 to 30 years to learn this here. So,
as you said, I can see how good of a training school it was in a short period of time, and with your background in sports and the discipline that comes with it, then transferring that and with an expert who then really kind of give you the ropes. Then right. When you went on your own, you were a well-oiled machine.
Yes, I mean I stayed with Bob and Cushman for a long period of time, for about 6-7 years, which I loved it. I mean, the competition, the market. There's someone that can take your job anytime, if you don't do your job.
It's competitive.
It is. made me feel like I was back in sports, like same sort of mentality, like all out, we're here to win.
Yeah.
There's
a lot of transferable skills too from I just mentioned the discipline, but what else do you think helped you in your professional career that you took from your sports experience?
I think, as a team and as a teammate, you have goals and you want to accomplish them, and you don't stop till you accomplish your goals. So a bit of the same thing. I wouldn't stop my work until it was done, even though if it was late at night, I would say like, oh, I'll do that another day. Like I would just finish what I had to do in order to succeed. And I didn't, I was very driven by success more than money. So like in sports, we were all on one team. It's fun. Yeah, it's good. You get the paycheck and all this stuff. But really what drives you, it's the end goal is to win the cup.
Winning. Yeah.
So I think that a hunger of winning and going after it and have a process and structure it and see the process working, I think that's what really drove me to the business, because it was very similar than sports.
So at what point did you transfer back to Montreal?
So I came back in Montreal in 2013. My parents, my dad was getting older. I had some apartments that I had bought here, so he didn't want to manage them anymore. For family business purposes, I had to come back. So 2013, I came back and I opened it in Cushman and Wakefield, Montreal, the investment side, which I came to a different market, knowing no one, from doing quite good in New York and being with the biggest team and everybody knowing us, to zip, right? So
it takes time to rebuild.
Yeah, and I was like super aggressive on the calls and on this and that, on the phone calls and with negotiation, because that's the way I had learned the business. But, I had to understand that it's a different pace here. You had to adjust. I had to adjust my game. In 2013, I came back here, slowly started at an investment team. After 8 years, I would say, we were starting to doing pretty good now, like in establishing ourselves as the investment team out of Cushman and Wakefield. And then Colliers made me an offer just during COVID. Colliers made me an offer that I couldn't refuse, to move my team to Colliers.
Okay.
And now we've been at Colliers for the last 5 years. Number one team in Canada, number one team investment in Quebec. So we've been doing well. It's always good to see what you accomplish, but also in real estate and commercial real estate, you're as good as your last deal. So it's always keeping you on the edge as well.
Yeah, you got to keep plowing ahead.
Absolutely.
And the last couple of years have been rather challenging for everybody. And about a year ago in the magazine, you had mentioned that you were seeing a big increase in land transaction.
Right.
So now, obviously, the market's changed. Like, do you feel like we're still on the same trajectory?
Look, the volume transaction this year, here to date, is down by 17%.
Okay.
The numbers of transaction is down by 6% for land total.
Yeah.
I think, unfortunately, it was a bit of a perfect storm for lands in terms of, the tariff and the construction cost, the interest rate shooting up. Very hard to make the numbers work. Nobody's buying condos because the interest rates are so high. So then the condo developers are out.
Yeah.
Now, the other option is to do rentals, but your pro formas your rental rates have to be so high because of the constructions are so high that do you believe you're going to achieve that? And if you do and you start building, are you achieving this? So I think main reason that it slowed down quite a bit are that the financial aspect of the market has changed. Thankfully that we saw mortgages like CMHC insured and construction insured by CMHC helping a little bit.
Yeah.
However, now we're seeing so much delay to get the CMHC loan approved, and so much more obstacle.
And the rental guarantees.
And all they're making it more difficult. And if you're now a big borrower, it's even harder. So I think that unfortunately, even though if we're in an apartment crisis, that it's becoming more difficult to build, and therefore correlation of the sales of lands are going down.
Yeah. And over the last couple of years, there's been a big increase in the number of multifamily, as you said, like for the housing shortage, and develop more residential. Now, for you, the market in a way being more challenging, that's had an impact on how you approach buyers, because you have to, in a way, work extra harder to make the property for sale more appealing. And you have some listing in land, you have some listing in mixed use. How has that changing market made you evolve in how you present, for example, some of those mixed use projects that have a bit of commercial, maybe a bit of office space, and a bit of residential on top?
So it's been challenging. I think that our biggest strength is that we looked at properties as an investor, but as well as a banker that's going to finance the property. Yep. What I'm saying by this is that we're going to underwrite the property like a bank would do. So we are going to understand before that we go to market what's the equity that needs to be able to purchase this property.
Yeah.
I think that approach makes it a bit easier when you speak with an investor by saying, hey, yes, the market is soft, but
here's how you can finance it.
Exactly. Yeah. And if it's not through a traditional way, because there's upsides into the property with a non-conventional bank for a period of time, and then go and refinance with a conventional bank. We do different scenarios that way and try to be creative. Again, my background is finance, so I can underwrite deals pretty easily. We need to be more creative. We need to have more resources with lenders and mortgage brokers and private lenders, just in order to figure out how to bring the deal to the end.
Yeah.
So it's been more difficult, but again, there's ways to figure it out. Adjusting to the market, figure out where's the soft spot, and we're going after it.
And even though the market's been a little bit more challenging, you've been very successful in it. What do you think has made the difference, like between how you approach some of those properties to sell versus, I was going to say, the competition?
It's I've been having this debate.
Why are you so successful, Joe?
No, I've been having this debate because we lost some mandate, and obviously after a loss, we recover and say, okay, we analyze what didn't go our way and what could we improve. And at the end of the day, I think there's two mentalities out there. There is the mentality where we did that most of the time, and we are doing that now, is that we go in there and we really tell you how much do we think the property is worth. And with comparables, not based on numbers, fictive numbers. It's really the way we think it's worth, with even a letter from a mortgage broker that would confirm the value and the financing with it and all this stuff. And then you have the other way where they're going to give a value, a very, very high value that they can justify with numbers, but really it's not market.
Yeah.
And basically we call that selling the dream, right? So sometimes people like to hear and go for the dream and they go to that direction. But I feel at the end of the day that if the market is not there, then what?
Yeah.
Then you say, well,
the dream becomes
market,
a nightmare.
And then the dream becomes a nightmare. You don't get the pricing that you were projecting, but the vendor is a bit tired. He's been go through the process. So it's like, well, if the property is worth that, I'm still going to go with it. Mm-hmm. Instead of me, I go in, I tell them the way I think what it's worth or close to it, and we try to achieve that. Yeah. So I think the reason why we've been successful is, number one, we tell the truth. We really believe in our values. Mm-hmm. And we also adjust. We look at the market, what we don't think is going to sell, what we think it's going to sell, sort of at different asset class, mm-hmm. and we go after these asset class. I can tell you that a few years back, I did not touch, industrial lands, or I did not touch. I was doing a lot of multi-residential land, but like older stock and multi-residential asset, I didn't touch. When CMHC came in place and the slowdown of the land development, I started shifting on doing a lot more multi-residential.
Yeah.
Which came end to end, because when you underwrite a deal to build resi and the building and it's the same. Yeah. Same. So I think we were pretty good on projecting where the market is going and adjusted to it as well. That's one of the reasons why we keep.
And it's great that you've made also a little bit of the shifts, so now you can cover more asset classes.
Yes.
Because I get some of your listings, and I do see that you have some pretty big buildings, towers, old port, downtown, some land, and all that. And going back to the offering with your finance background, being able to accompany and guide sellers with the financial modeling, therefore what the property is worth. Now, your bread and butter has been on the commercial side. Where do you think you can still continue to have an edge? Because it's very competitive out there right now.
Yeah, you mean in terms of on the asset class where I see the market going? Yeah. I learned with the years that it's not where everyone goes. That
it's the opposite.
Yes, So I think that there's a big opportunity in older stock multi-residential from 30 to 100 units that has good fundamentals, but family owners didn't invest any money into the properties. There is money to be invested. There's upside to the property. I think through balance of sale, CMHC mortgage, bridge loan, raising the rights, investing some capital into the properties. I think that's where in the market there's the biggest hold at the moment. It's not shiny. It's not new construction, 500 units.
No.
However, there's a lot of family office that can't keep up with the rising of the rents. They don't have the cash flow to invest it and to be able to raise the rent. So if you can be creative on financing and get these people to sell the properties, I think this where there's a big merge into the.
So you're saying there's a lot of opportunities right now in repositioning and optimization.
Yes. However, you have to find them. Right? You have to find them, and most of them are private owners, not always easy to deal with.
A bit disorganized, a bit of sometimes crazy expectations. I'm working on a transaction exactly like that, actually.
Yeah.
It's interesting that you mentioned that.
Yeah, especially that if you're used to do institutional transaction where all the paperwork is in order, budgets are in place and all this stuff, like most private guys, sometimes you get an Excel sheet, not even an Excel sheet, like a file with
a photocopy, handwritten rent roll.
Exactly.
Yeah.
So but that's also part of the game, right? So
and that creates opportunities. In some ways, I love owners like this because then all the upside is mine.
Yeah, 100%. So
I love the city of Montreal, and I find we have a very unique market here versus the rest of Canada, obviously versus the U.S. For the next couple of years, what do you advise your clients to keep their eyes on in terms of opportunity?
Well, it depends on a few things. I think depends on what are your skills. Like I do believe that, especially with a change of power now, I do believe that new construction, multi-residential will come back. It's just evident that we need more apartments, and I don't believe that because there are new construction, it's competing with the older stock. I think that if you're used to be in grade C, let's say grade B, grade A, and then new construction, everybody's going up into the ladder by adding more product to the table, right? So I think if you're a developer, I think multi-residential, rental will be needed. I think that we will see more support from the governmental side of the business. I think they are looking, and maybe it takes a long time before they turn around, but I think we're there. I think they're going to stop thinking that we need to be partners with them, but instead to give incentives on taxes or more density or whatever that is for developers to be able to make numbers work. So it really depends. And again, older stock,
there's opportunity.
A lot of it, that needs a little bit of love, that could be well financed, needs a little bit of investment, and you can buy a lot of units that way too. So
I completely agree with you. Again, we're working on a transaction now with some partners where there's a couple buildings, and one of them is quite large, big units. It's just that it hasn't been properly maintained. There is some deferred maintenance, and the envelope is okay. It's just the units have a lot of potential.
Right.
And exactly as you said, is just you need to be patient. You need to have a good team, and optimizing a 50-unit building doesn't happen overnight.
Right.
But for investors who are patient, who are well organized, there's tremendous opportunity because right now rental rates are going down a bit, but it will come back. We still have a shortage of housing, and in the long term, and even if it's just medium 3 to 5 years at this point, there will be an uptake.
Yeah, 100%. And yes, our rents are going a bit lower, but we're still below 2% vacancy in Quebec, right? Yeah. And our rents are much cheaper in Toronto, Vancouver, all these places.
Not even comparable.
So, and Quebecers, I think 70% of them are renters, right? So what does that tell you? It's like there's going to be more opportunities. There's just, I think that, like you said, you need to be patient. You need to have some capital, but the opportunities are there.
Yeah,
absolutely.
Wow. I'm very happy you came on today, Joe. I hope that you'll come back.
Absolutely.
And to hear about your perspective on the market and how things are going with your team and everything at Colliers. So thank you very much for joining us.
Thank you.
To everybody who's listening, Thank you for joining us today. As usual, you can find a lot of the information on Espace Montreal. You can go on the website. The magazine is available to read online. And if you'd like to receive a free copy, reach out to us and we will put one in the mail before you subscribe. There you go. Thank you very much. Thank you, Joe, again.
Thank you
for coming on the show. And I will talk to you next week. Goodbye.